Hi everyone, today let's quickly go over the Fed futures, then we'll go over the charts, then we'll go over my results for the day and my positions going into tomorrow's session. If you like trading stocks and options and making money, definitely like and subscribe. I make videos like this every single day that the markets are open as well as Sundays, so make sure you hit the bell so you don't miss out on any future episodes. Welcome to the Portfolio Bulletin. Let's get started. So moving over to the Fed futures here, you can see we're very, very likely to get 25 basis points at this point. 85% continues to tick higher here, so does look like 25 basis points is going to happen tomorrow. May still looking at 25 basis points as the most likely, so 2 more hikes before we get to June, and then assuming that we get those 2 hikes, the most likely course of action is still a pause here in June, which is 1 month earlier than what we expected previously. Looking at July, you can see it's just about split between another pause and another 25 basis points. A couple of smaller percentages here, but this is really what we're looking at. Of course, all of this could change based on the Fed comments. I think it's pretty straightforward that we're going to get 25 basis points, but what Jerome Powell has to say is definitely going to affect the markets as well. So make sure you watch his comments, and of course, I will be commenting on his comments in tomorrow's video as well. Moving over to the charts, starting with the S&Ps on the hour and the daily, you can see we came up to that resistance, initially found rejection, got support at the 9 EMA here on the hourly chart, and then we rallied through resistance here all the way up to that 398, almost 399 level. After this level, we're looking at resistance around 401, 402. Talked about that level before. Looking at the daily chart, momentum is bullish. 4-hour chart, momentum bullish. RSI is a little bit overbought here on the 4-hour, but definitely has room for upside here on the daily chart. We're still kind of in this downward pattern. We're definitely looking at potential resistance. You can see the last time we came into this resistance here on the daily chart, we did get a strong rejection, so keep that in mind. We're at a critical level here going into the FOMC meeting. Makes sense. If we do push above 402, then we're looking to probably 413.50, these previous highs, before we get major resistance. Probably find some resistance around 405, but 413.50 is going to be your next major up level. Looking at the NASDAQ here quickly, you can see we got a big up candle early in the session. Quickly rejected, game down, almost retested VWAP on the 15-minute chart, got a little bit of a double bottom formation. Unfortunately, I got squeezed out on this down move after we had that decent up move, and then I was not able to trade here in the midday due to some other things. So unfortunately, I missed a lot of this up move, which actually ended up being pretty clean here throughout the rest of the day, pretty much from 11 o'clock through the end of the day. And then looking at the hourly chart, you can see we came up to that 310.25 level, just like we talked about yesterday, being resistance. If we can get above that level, then we're looking at up around 313, 314 at the next trend line. Looking at RSI here on the 15-minute chart, definitely overbought. Might see a bit of a pullback. Maybe we come down to 309. That would be interesting. But otherwise, looking at the hourly chart, not quite overbought yet. Still looks bullish going into tomorrow's session. Moving over to the Russell and the Dow, similar to the other major indices, you can see we gapped up and rallied, looked very strong. Did get a pretty decent rejection wick off of this midline here, so keep that in mind. And we didn't close above that level either, so it's not quite a reversal of conditions yet. We do have a double bottom here that looks strong. Momentum looks strong. RSI looks strong. But like I said, I would like to see a break above this 177.35 level. And then above that, we're still looking at 179.50 at the major trend line that we interacted with multiple times here over the last few months. Looking at the Dow, gapped up, rallied, looked pretty strong, closed above the 55 EMA. Zooming out to get a price target here, looking at 328 at the next area of highest volume. We're pretty much at this previous low already, but I do expect to push through there as long as we continue this rally. And like I said, 328 looks like the next upside. Bullish momentum, bullish RSI, looks good going into tomorrow's session. Moving over to Apple and Tesla, you can see Apple breaking out, making new highs, looking up to that 161 level. Didn't quite get there yet, but it does look like we will. Moving over to Tesla, it does look quite strong, got above that 193.50 level, back into this previous zone of consolidation, up at 197.43 here after hours. Certainly could get up to 201 as your next level. If we can get through 201.50, then you're looking at about 205.50. When you're looking at the volume profile here. So stuck right in this node, then you're looking at 201, 201.50, then you're looking at 206, 205.50. So basically all of big tech right now looks pretty bullish. Moving over to oil and gas and financials, you can see oil and gas actually found a base, gapped up, rallied, looked pretty good here on the day. Similarly here on financials, after this huge move down, we gapped up, rallied, looks a little bit stronger. Tag that 32 level, looking at the 55 EMA as your next area of resistance up at 33.33. And you can see that correlates with this next node right at that $33 level and this previous gap sitting just below that. Moving over to staples and discretionary. Staples had been outperforming, and it still looks bullish here, but looking at discretionary now, this looks very strong. We gapped up, rallied very strong, continued to rally. We're at resistance here at that 145.50 level. We talked about that being the next zone of resistance at this area of next highest volume. If it does break through here, then you're looking at pretty much this previous consolidation up at 150, so another $5 of upside if we can continue this rally. Momentum on the 4-hour chart looks very bullish, lots of room on the RSI before we get to overbought conditions. It is worth noting that volume on this rally was not there. We had high volume in this previous consolidation, but the volume here on this move was not very strong, so keep that in mind. But otherwise, discretionary outperforming here in the short term. Moving over to transports here, you can see we actually gapped up and rallied just like pretty much everything else in the markets, which is good. We see transports finally participating in this rally. That gives us a little bit of confidence going into the following weeks. Still at an area of resistance on the daily chart though, so keep that in mind, but slightly more bullish momentum on the 4-hour chart. Both RSIs look fairly bullish, but you would like to see the daily chart RSI get above the SMA, and that would make me feel a little bit better about chasing this rally. Right now, we're still kind of in this bottoming formation, and if we do break out from here, there's a lot of upside potential before we hit major resistance up at around 250 on transports. Moving over to the dollar just for a moment, you can see the sell-off continues. We made new lows here again today, but momentum here is starting to decrease. It looks like we might get a little bit more of an upswing. That makes sense with the Fed. Usually once the Fed locks in that rate hike, the dollar should do a little bit better, and maybe we come up and retest that 103.64 level. That would be interesting, retesting those previous lows as well, and maybe that gives equities a little bit of time to cool off in tomorrow's session. Similar to transports here, looking at J and K, you can see we gapped up and rallied, testing that 55 EMA on the 4-hour chart. Bullish momentum, bullish RSI, bullish momentum on the daily chart too, so that's interesting. Pretty uncommon to see increasing bearish momentum and then increasing bullish momentum back to back. But it is interesting here to see that very strong candle above the 21 EMA, above VWAP here on the daily chart. Didn't test that 91 level, so a little bit of upside potential here. But it does look much better now that we held this 89 level, moved up much stronger. And if we can continue to rally here up to around $92, that should give equities quite a bit of room to the upside, in my opinion. Moving over to the VIX here to finish up with the charts, you can see we continued that breakdown that we talked about. We actually gapped up from this previous level, tested resistance once again, and then broke down below the previous low. So it looks much weaker. Momentum on the daily chart, very weak. 12-hour chart, also very weak. You can see we got the cross on the SMA, on the VIX as well. So everything looks weak going into tomorrow's session. Of course, that could certainly change with some interesting FOMC comments, but right now the VIX looks like it's going lower. Moving over to my accounts, again, not a great performance. So I got stopped out early and then I wasn't able to trade through the midday, which is when we got that reversal. So that is unfortunate. Looking at my positions though, I did actually buy a put here for the first time in a while. Really cheap one, only 50 cents here for a 98 put here on Google. I just think Google's a little bit extended. If you look at the chart, Google has been rallying pretty aggressively. I think they'll probably get at least somewhat of a pullback over the next week. And if they do, I'll probably take a small profit on this position. I'm only risking 50 cents, so we'll see how that plays out. Otherwise, looking at my positions for the Qs, I ended up rolling the call up one and out a day here to 302, $6.70 credit here, so tons of protection on this covered call. Depending on what we see tomorrow, I'll probably let this go. I know I've been saying that for a little bit here, but I think depending on what the FOMC says, I'm probably going to get back on the selling put side just to get a little bit more credit on the put side. Rolling these calls here does give me lots of protection, but it does reduce the amount of credit that I can receive, especially when markets are rallying as strongly as they have been over the last week. Otherwise, no big changes to my strategy right now. Still going to look to do the wheel method and reduce my day trading, like I said before, because I don't have the same time to dedicate to it. Let me know down in the comments section what you think of the markets. Is the Fed going to come out hawkish to maintain their credibility, or are they going to come out a little bit more dovish just to keep the public calm with the most recent banking crises? Definitely like and subscribe if you got any value out of this video, and make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.